Quite a policy statement, though, must say. Not much in terms of action or even takeaways on the growth front or otherwise. So the two things that stood out for me, Tamanna, one, I love the dialogue. In the past, the elephant in the room was inflation. Now it's gone for a walk, heading to the forest. But that notwithstanding, two things. One, will continue unwaveringly focusing on inflation, saying that MPC should remain disinflationary. So the focus is on inflation and not growth thus far. Maybe growth is taking care of itself, though they didn't raise the targets. And RBI will continue to constructively engage with financial sector entities. I believe a lot of questioning will happen in the press meet. I think those two stood out for me.
So the other bit on inflation, which stood out for me, was when he said that till we don't reach our target, our work is not done.
Yeah.
And then you look at the inflation outlook for the next 4 quarters, and there is no case right now to understand why they would cut rates, because that target is not in sight. 4% is the target. Now, in none of those quarters is 4% in sight. So,
except for quarter 2, but which is just a passing thing, 3.9%.
Yeah, so that's neither here nor
passing,
there.
Yeah.
The year is 4.5%. So you're way off. So now that makes me wonder whether you're going to have a rate cut this year at all. In terms of dialogues, umbrella was my favorite. You know, when he talked about how the RBI was criticized when forex reserves came down, he said we had an umbrella, there was heavy rain, we used it. Now we've built it back up. Anyway, so a lot of interesting things to unpack over here. Jayesh Mehta is with us. He's VC and CEO of DSP Finance. Tanvi Gupta Jain, UBS's India economist, also with us. Welcome to both of you. Thank you so much for speaking with us on the show on NDTV Profit. Jayesh Mehta, let me begin with your first take. What was the outlook that you really saw coming through in terms of a rate cut timeline?
I think as per expectation, it was very clear we're not going to touch rates, and as you just said, till we reach 4, or US cuts rate. So from that perspective, I think nowadays it's a little bit dicey whether US may actually cut rate or not. So that's a question mark which is coming in. But having said that, growth is taking care of itself. That's what you just said recently. Inflation at 4.5 for second half from second quarter onwards. We still have some room to cut rate, because at the end of the day, one has to really look at it like 2% real rate on repo. That may fizzle down growth if it continues for a longer period. So at some point of time, whether international market cuts rates or not, we may still have to cut rate, provided the global geopolitical oil price, rainfall, everything remains as per projected.
All right, so it might, so either Fed becomes the trigger, or we hit 4, maybe at 4.5% as well. So I suppose quarter 2 onwards, the case gets stronger. Tanvi, very good morning to you as well. Your take on the rate cut sort of comments and what you glean out of it. And also perhaps, were you surprised that the target for next year for growth continues to be at 7% when you've seen such robust data coming in?
Sure. So let me start with, what is my take in today's policy. So if I look at the way Indian economic growth on the ground remains robust and a manageable macro stability risk, we clearly were of the view that there is no urgency for the MPC to either change the policy setting, whether it means rates or stance at this juncture. But going forward, I would say, looking at the policy, RBI was sounding a little cautious, largely on 2 counts. One, we are seeing global oil prices have moved higher over the last few days. They are hovering at around $90 a barrel, plus uncertainty on the food prices. I mean, if I look at Indian Met Department recently forecasted longer heat wave between April to June. I mean, whenever we have seen warmer temperatures, we have seen vegetable prices, fruit prices. There's a possibility of the prices to go up. So clearly, there is a lot of uncertainty on the food inflation bit. Going forward, beyond June, we are all expecting that La Nina, which typically brings more rainfall, will set in by June. So hopefully, a monsoon season between June to September, we end up seeing a normal monsoon, which will help keep food prices in check. But at this point, obviously, you need to price in, because RBI categorically is highlighting that the medium-term target is to take CPI down to 4%, and then they're not happy to CPI hovering at a rate which is much higher. I mean, currently it is trading at 5.1. The expectation is that the March inflation print will be somewhere between 4.8. That is what our estimate is. On the rate cut assumption, we still have a shallow easing cycle in our FY25 policy rate forecast, but that too is a function of three things. One, how the weather uncertainty will play out. Second is oil. Third is, and the most important is that Fed pivot. So as of now, we are also estimating a June rate cut by the US Fed, but looking at how the US data has been surprising on an upside, in case it gets pushed forward, I think it will be very difficult for RBI to go ahead and start cutting rates. So as of now, we do have a shallow easing cycle, mostly backdated, and will also be a function of how the global monetary easing pans out over this year.